Hello everyone, a very good morning, good afternoon and good evening to all. Myself Vaibhav. In today's session of automated trading, we are going to continue to work with the RSI and the Williams R and ATR combination. We are basically looking to develop a scalping algorithm for which we have done earlier three parts and we are almost done till the buy side of this algorithm. In today's session, we will be building on that and we will complete the sell side and hopefully, by today's session, our algorithm will be up and running. This is a functionality of RSI. I hope by now you are well familiar. And the Williams R, and then comes the ATR. Before we go into the details, I would like to remind you that this session is simply for the tutorial purposes and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. And suppose if you want to use any of it, I would recommend that you do extensive trial runs and also allow it to run on the sufficient enough time on demo account to get a clear idea of the efficacy of the algorithms developed here. And nothing in the webinar is to be constructed as an advice to trade or for any particular setup. Now let's go to the chart. For the sell side, let me help you define the conditions. So first thing is that we look on the 4-hourly chart and we will need the RSI values to be falling. So we will be comparing the RSI value of the last candle close to the a day back, that is using the shift 6. So here now the last candle's RSI value is 36. So we go back and here we will get the prior value and it was 50.9. So we compare these values and we see the RSI values are falling, and then the second condition that the last candle closing's RSI value should be 50, that condition is also fulfilled. So we will be looking for a selling opportunity and in such scenarios, and then we will turn our attention to the hourly chart to see when it will be optimum to go in for a sell trade. So for that we will be looking at the price action and the Williams R values as well as the ATR. And here one thing we will do is that whenever the Williams R is in a overbought territory, we look back on the 3 hours. So if the current value of the Williams R is also in overbought territory, but we need that overbought conditions to have prevailed for last 3 hours at least. So only after that we will be looking at a sell trade. So now right now, suppose if we consider the current value, it is lot closer to the oversold territory, and for that we have brought in further condition as well that whenever we are looking at a sell trade, the current Williams R value should be above minus 50. So if there has been too much of a movement on the downside, we will stop looking for the fresh sell trade. So and now here no trade is going to happen. Let us consider some situations where we might have got a sell trade, and not many times in recent price action we have got such scenarios. I think here let us assume that 4-hourly conditions are fulfilled. In such a scenario we will be checking on the Williams R value, and as you can see the overbought conditions are being maintained for quite some time here, and also the Williams R value is not dropping below minus 50 so fast. So we can use this condition, then our attention shifts to the price action, and in the price action we need the last candle to have closed in red, that is its closing price was less than the opening price, and at the same time we also need it to fulfill the condition that its closing value is less than the prior candle's opening value, and also the prior candle should have closed in green, that is the prior candle's closing value was greater than the opening value, and now in these are the selling pressure is coming back, so we need those kind of conditions as well. So only when all these conditions will come together, we will be going for a fresh trade, and then we turn our attention to the ATR levels for optimizing the entry and the exit points. So we will be utilizing the ATR on the hourly chart to define the stop loss, the target, and also the entry point. For that, now let us go to the Visual J Forex platform to see what kind of development we have done so far. This is a standard instrument subscription. We are utilizing the Euro USD. Then we have defined the position amount at 0. Then we got these RSI values, as I said, shift 1 and shift 6 to look back in time and see what kind of values we have in the recent past. Then Williams R on the hourly chart, shift 0 and shift 3 to compare the Williams R values and define the overbought or the oversold condition. Then we got the historical candle, as I explained to you just now, how we are going to utilize the historical candles. And ATR is going to help us define the entry and the exit point. Then we are doing these calculations for determining the stop loss and target price. Then we got this trigger for entry both for the buy and the sell side. For that we will be looking at the 1 minute candle, and then we will be defining the threshold. That threshold is the closing value of the last hourly candle, and whenever the price starts to rise, the order will be placed. Then we have defined this some of the entry conditions here, and here is the buy entry and the sell entry and the order validity time, and this is the entry condition. For that we are utilizing the ATR range, and we will be multiplying the ATR by 0.30 to get the 30% of the ATR value, and then for the buy trade we will be deducting the ATR value from the last hour's candle close, and for the sale trade we will be adding this to the last hour's candle close, and that order will be valid roughly for 1 hour. You can change it, but we are going to work with the order validity of 1 hour. So here, and the tick time TT is 3.6 million. So we have done all this. Now it's time to start building the sell side. Before that, let us take a look on the buy side. We want our algorithm to be symmetrical, so all the conditions that have been defined for the buy side will be kind of inverted, and then we will be using the similar kind of formation but only in inverse fashion for the sell side. So these are the if conditions which are helping us determining the buy entry point, and we have done this dynamic stop loss target and the order validity thing as well. So let us start today for working on the sell side. We will need couple of if blocks. We straight away first we check on the RSI values, and as I said, we compare the RSI value of the shift 1 block to the RSI value a day back. Let us take a couple of if blocks here. Now here we will need to look at the RSI value, shift 1 and then shift 6, and for the sell side it should be falling. So we want to make sure that first input is less than the second input. Then another condition is that the RSI value should be below 50. So we define that condition as well. It should be less than. Okay. Now we move our attention to the Williams R on the hourly chart. And we go to the Williams R conditions, and here we will be looking at the current Williams R value, which should be greater than minus 50. We take in another if block. Let us take a couple of 8. We are going to need it anyway. Now Williams R value should be greater than minus 50. Then we look at the Williams R value 3 hours back, and there we define the overbought territory, that is minus 20, and so Williams R value 3 hours back should have been in overbought territory. That means this is not the start of upward momentum, but things have been in overbought condition for at least couple of hours before we try to look for the sell trade. So here it should be greater than minus 20. So I will show you on the chart once again. As we were looking at this condition, so the current Williams R value should be above minus 50, and then the prior 3 hours value, the value 3 hours back, should also be above minus 20. So that will convey us that the underlying instrument has been in overbought situation. Now we connect this to the sell side. So the initial requirements using the RSI and the Williams R have been well defined. So here we now we will need to look for the hourly price action. For that, we will be looking at the last candle and the penultimate candle here. And we go back and utilize the opening and the closing values of the historical candles. So here we got candle 19 and candle 20. The candle 19 is with the shift 1 and the 20 is shift 2. So first we need the candle 20 to have closed with gains, and then we need candle 19 to have closed with losses. But not only that, we will be comparing the candle 19's close with candle 20's open value as well. So that condition also needs to be looked at. So we go for the auto created variable, and here we got it. And candle 20's closing should be greater than the opening price. So we take in another if conditional. Let us take 2, 3. And we will need to see this close value should have been greater than the open value. So we connect it here, and we look at candle 19's opening and the closing values, and here we will need the candle close to be less than the candle open, and then we connect it. So the closing value should be less than the opening value. Okay, now we compare the candle 19's closing to the candle 20's open, and the closing value should be less than the candle 20's open. So we again go to this candle 19's closing value should be less than the candle 20's open value. That will mean that the momentum is strong, and whatever gains were recorded in last 2 hours back have been eroded, and last candle in last hour there was a significant price pressure. And let us bring in another A block, and then we connect this candle closing to have been less than the candle 20's open. So far so good. We now need to take these blocks to where they belong. And comes so we have looked at the RSI values, the Williams R values, and then the price action on the hourly setup. Now, and here we got this. Now the other conditions needs to be fulfilled as well, and for that we will be looking at calculation expressions. So here we have done this, the price action and the Williams R and the RSI values, just to make sure that we are moving in a symmetrical fashion. We will also need to take a look on the conditions defined so far. Yes. Okay. Now we are almost done with these three of the conditions. The next step is then logically the trigger point and one limitation factor as well. So we will need three blocks, and the first thing will be that last tick bid should be less than the candle 20's closing value, and for that we go to on tick bid, last tick, and here comes last tick bid, and it should be greater sorry, it should be less than the candle 19's closing value. So we can join the, okay, we have one if block here as well. Oh, we have got one spare one here as well. Okay, and we go to the candle 19 and we take the last take bid, and then we compare it to the candle 19's closing levels, and we want it to be less. Okay, so it is going to be less, and comes the trigger point. So here also we will be looking at the candle 19 closing levels, but one more factor will be the 1 minute get historical candles, and for us we will need the candle 30's closing to have been greater than the candle 19's closing. So we take one step at a time, and first thing first, we will need the candle 30's closing value, and then we compare it. It should have been greater than candle 19's closing value. We now need further blocks, and to do that we take this and this time around we are again going to look at the candle 19's closing level, candle 19's closing level should be higher than the candle 30, candle 29's closing level. So we compare. This is 1 minute shift 1. We need to go to the okay, we got it, and here we go, and this closing level should be less than the hourly candle close, and then we will be pretty much done with this setup, and we will need to add the pending open, and here it should have been less, and then the candle 29 closing level should also be less than the candle 19 close, and then we go to the pending order, and here comes the pending open. We will be putting the order on the upper side than the price action, so for that we will need to make some changes here, and first thing first, we connect this. Input is less than the second input. For us, we had done the calculation in yesterday's session itself for determining the sell entry point, and that is 30% plus candle 19 closing level. So default instrument, we are simply sticking with the fixed ratio here. Oh, the price is the SC on which the orders are supposed to execute, and the instrument is oh, here we have got into the trouble. We will need to take the default instrument, so let it remain blank for some time, and trade amount will be capped at 0.1 million. 0.1 million. Slippage is 2 pips. Stop loss take profit, also we make changes to that, and also we need to get in the default instrument setup, so we got it. Entry point is going to be in the limit, so we need to use a limit, and using the calculations we have done so far, we define the rest of the parameters, and now we need the stop loss and the take profit. The stop loss is here, and the target price is okay. So it seems good to me. Now is the time to test if it is going to work or not. Let's see how much of time it will consume. If it is taking too much time, we will stop the test midway, or if it is able to cover the ground, we can at least do a couple of weeks of testing. So here we are almost done, and so here we are on the verge of getting testing done for this algorithm, and let us take a look if it is all symmetric or not, and both buy and the sell side should be symmetric for us. As of now it is looking all similar, 10 if conditions, and then comes the market open, for which we had done a lot of calculation in yesterday's session itself. So let us save the file. Okay, let us export it. And one thing while doing the stop loss test run is also that many a times the audibility goes down as the CPU ramps up the uses. We'll save it and then do the testing for a minute. Okay, we got the folder, and we have to now import the same file here. I think puppies have come in the common area. Our file was April 20th, so we got the file as well. First we need to compile it. We do the compilation. Let us see, compile. Okay, compilation successful, we got it. Now let us test it for maybe we can test it for previous week. Account, good enough. target price, so we just do this. Let's run. Fortunately, the test speed is quite good. So suppose if you want to test for longer duration, you can pretty much do that as well. We will not do it here, but whenever you will build it yourself, you can run it for extensive time to see what kind of trades are being generated by the algorithm. We are almost now approaching the end of the testing period as well. So no trade was actually taken last week by the algorithm. So because of the stringency of the conditions, the trading will happen only when all the parameters are fulfilled, and it is taking a minute for a week, so you can test it for even a year within an hour, I guess. So that's it from my side for today's session. We will be back tomorrow with a fresh setup, so stay tuned and see you back tomorrow again. Goodbye.